Hello again, fellow BeachBum traders, and welcome to part one of our weekly trading game plan for the week of August 8th through August 12th. And today we're going to see if we can determine whether we're seeing the stock market's breakout or if this is just another fake out. So we'll work together, we'll do our market analysis, we'll see if we can again determine if the stock markets are breaking out or if this is a fake out. And then hopefully please stick around to the end of the live stream. We'll talk about some potential strategies, how we can make money trading, whether it is a breakout or a fake out, and if whatever market conditions may present to us. So we'll get started. So again, this is part one of our weekly trading game plan for August 8th through August 12th. So we'll start, we'll look at FinViz. We'll see how the markets ended up on Friday. Again, we've had some diverse economic data, potentially apparently conflicting. We'll go over that economic data, talk about our interpretation of that data. Again, we're not financial advisors. This is for educational and entertainment purposes only, but we'll give you our opinions and how we're going to play these markets to try to make money. So again, Friday we could see kind of a mixed market, choppy. Part of that was significantly impacted by the jobs reports that came out at 8:30. We'll see the various reactions to those. So we can see the S&P and NASDAQ ended up negative. The NASDAQ got hit more. We'll look at some of the reasons why that may be the case. The Dow actually ended up positive. We see advancers and decliners was pretty much split. Same way with new highs and lows. Right now we can see we've got a majority, 68% or so above their 50-day moving average, but still a majority 77% below their 200 moving day. So now, a majority of the stocks can use their 50-day as a support point and try to break out of the 200-day moving average. So we'll look at the indices as well. See the heat map. A lot of technology obviously was red on Friday, but we'll look at how it performed for the week, etc. We look at some of the news. Again, the big news for Friday was the much better than expected jobs report. More than double the expected payroll numbers came out on Friday, and therefore, and we'll talk about the interpretation of that in a minute when we look at the economic data in more detail. So we see also oil broke down. We see natural gas broke down. Also gold. Again, we'll see that the dollar strengthened on this jobs report news, and therefore dollar-denominated commodities took a hit. We see the treasuries really jumped up. They had been declining below 3%, and again, based on that payroll news, it jumped up to about 3%. We can still see we've got some level of inversion between the 5s and 10s. Also, again, we're going to talk about the dollar strength. The euro to dollar declined. It's hopefully closing in on parity again. We'll talk about how we're going to play that. So another thing I wanted to look at, we'll look at the indices real quickly, and then we'll look at the fear and greed index as well, where we stand. So if we look at each of the indices very quickly, we'll look at the SPY, the S&P 500. So we can see it's reached this pivot point. And again, we're looking are we going to get a breakout or are we going to get a fake out? And we see as soon as it reached that pivot point on the 3rd, it pretty much stayed there on the 4th and then rejected on the 5th. So that's pivot point seems to be acting as a significant resistance. We can see the last time it tried to break out of that pivot point, it chopped around that line and then declined pretty steeply back in June. So we can see also this nice support level that's now using the 50-day as a support. And if we zoom out a little bit, we could take another look, and then we'll look at the other indices as well. So again, we can see it's broken out of this moving average, the 50-day moving average. So it's broken above that. It's acting as support now, but it's still significantly below its 200. It's near this top. So again, this previous high is acting as a resistance point. So again, it's very indecisive whether we're going to get that breakout or whether we're going to get a fake out. We're going to get a retracement back to a previous low. So again, this moving average and that pivot point are acting as significant resistance right now. We can expect some chopping around that pivot point until it makes a decision whether it's going to break out and head back up to the 200-day moving average or break down and go to the previous low. Similarly, the NASDAQ had a nice run. It's above its moving average nicely. It's still well below the 200. It's well below the previous high. So again, maybe the NASDAQ is going to make a run up to that moving average. We'll have to see. We see a little bit of a decline in the volume, so that may be part of the summer stock market doldrums. Look at the Dow. Again, very similar. It did break out of that moving average and is sitting very close to that moving average, which now can act as support. So all these indices, they have the 50-day moving average as a support. They just need to get some volume, some oomph, some positive catalyst to make a further jump up to the 200-day and further break out. So similarly with the Russell, again, it's above its 50-day moving average. It's got some support. It's well below the 200. So we got to break out of that 50-day moving average. So we can expect some chop around that moving average until it gets some volume and decides which way it's going to go. We also look at the VIX. This was interesting on Friday, even though we were seeing some decline in the S&P on that payroll news. The VIX has continued to decline, so that was interesting. Typically, although not necessarily, when the S&P goes down, the VIX has a tendency to go up. But that tells me that there was not, really a reaction, a negative reaction to those payroll numbers overly so, and the VIX is continuing to retrace to its mean, and I would expect it to continue down to the 20 range if we don't get any catalysts that cause it to spike up. Then it could go down to 18, and the lowest would be about 16. So again, even though we had some unexpected payroll data on Friday, the VIX did not really react much. So, and the markets, even though they chopped around a bit, there wasn't an overly sizable reaction. So now this week, I also wanted to just take a look at this Fear and Greed Index. It's on CNN. And I'll just click over there. You can find this link in our notes. And again, our notes are available in the description box below, the links to this Google document. It's also in a public Google Drive folder, so all of our previous notes from the recent trading game plans are in a public Google Drive folder, which is also the link is available in the description box below, so you can access these links, all these notes for further reference. Also, these tools and reference links are available on our homepage in the links categories. Homepage is beachbumtrading.com, bum without the U. So again, you can find these various tools that we use, our trading platform, these resources. Again, and we'll also look at the sector spiders as well. So you can find this link to the Fear and Greed Index. So let's take a quick look and see at the level of fear and greed currently in the market. So I'll let that guy load up, and while that guy's loading up, why don't we go ahead and we'll look at the Groups tab in FinViz. So we'll see what sectors, what industries perform better or worse on Friday. And again, in our strategy section, we'll talk about our thesis that we're seeing a sector rotation where these sectors are rotating back and forth over every couple days, and that may be some opportunity to make money. So again, on Friday, we saw energy, basic materials, and financials, etc., jumped up. But if we go to the week, we can see energy, basic materials were at the bottom. So again, we're seeing this sector rotation, and I think the big money is looking at this and saying, okay, who underperformed, who can we get some alpha from? And then they rotate the money into there. When that one reaches top, then it'll rotate money into some other area. Like we've even seen consumer cyclical had a run for a little while, and it was the most negative on Friday. So again, that's part of the strategy we'll talk about at the end of this video is how to play the sector rotation. So we'll also look at the industries. So we see on Friday a lot of basic materials and energy, uranium, copper, all ran up on Friday. And then the most negative were some like technology, travel, etc., communications, etc. But for the week, we have some technology, some biotech were in the positive, and the most negative were some of the energy, etc. So again, I think we're seeing this sector rotation on Friday. They picked off the bottom and rotated money into that. I would not be surprised to see a reversal, and again, rotating out of energy, basic materials within a couple days, and rotating possibly into technology or something like that. So this guy's not loading right now. I don't know why, but you can bring that up via the link. I can tell you currently the setting is approximately neutral, so it's not telling us either way which direction the market's really going either. And again, if you look at that, you'll see a mixture of signals. Some are greed, some are fear, and again, it's very indecisive. So we're getting a lot of indecisive indicators as to whether we're going to get a breakout or whether we're going to fake out and reject from here. So take a look at that. Hopefully that will help. Again, we have another video in more detail about how you can use that groups tab that I was just looking at, but we'll go ahead and look at some of the economic data. So from last week, on Monday, we got some PMI and ISM, which is Purchasing Manufacturing Index and Services Manufacturing Index. And we can see it was a little below expectations. The services was a little bit above expectations. And the news, and again, this is a link to an article you can access via these notes, is that factories grew at the slowest pace in 2 years. So what we're seeing is a decline in manufacturing. And I think that that's important to note. And I was just listening to Kathy Wood's ARC. They do a webcast on Jobs Fridays after Jobs Fridays. She was commenting on the same thing, that the manufacturing sector is slowing, but we saw jobs and services, etc. We'll talk about that on Friday, that the service sector is growing faster, but manufacturing in the front end of the supply chain is slowing. So on Tuesday, we got JOLTS, which is open job openings data from June, and we saw that the number of job openings dropped for the first time since last fall. So here on Tuesday, we got an indication that the number of open jobs decreased, and that maybe that was because people were pulling job openings off the market, or that they were getting filled. It was unclear at that point in time. So Wednesday, one of the things to note is the OPEC meeting. They are increasing their plan by only like 100,000 barrels or something. So not a dramatic increase in oil. not what Biden was really looking for or asking for. So there's not a dramatic increase in supply from OPEC. There is some demand destruction, etc. And we've seen oil decline down below 90 during this week. So services PMI again was a little bit better than expected. Factory orders was a little better than expected. Non-manufacturing, again, all of these were positive indicators from an economic standpoint. Crude oil imports was much higher than previous. So then Thursday, we got job cuts, was much less than expected. So again, all this is telling us the job market's still quite strong. Jobless claims was a little higher than expected, so more people are filing for unemployment. So again, we're getting these mixed data on the jobless front. We'll talk about what we think might be causing that. Another interesting one that came out was the natural gas storage was much higher than expected. It was positive, so they're storing more natural gas, and we saw a decline, although a lot of volatility in the natural gas prices. So then Friday we got the payroll data, and again it was much hotter than expected. The non-farm payrolls was pretty much more than double what was expected and significantly higher than previous, and that caused everyone to react, assuming that, okay, this hot employment market means the Fed can continue to very aggressively raise interest rates to try to kill the still very hot inflation. So we saw a reaction. The bond yields went up, the U.S. dollar strengthened, tech got hit, hard on those factors. Although I saw again quite a bit of resiliency in the markets. It didn't, completely dump, crash, etc. What that tells me is that there's still a lot of money that wants to be deployed in the market. So they want to buy. They want not necessarily push the markets up, but the big money, the smart money, wants to be deployed in the market. And again, I believe that's why we saw this level of resiliency in the market. It didn't significantly decline. Typically, when the U.S. dollar goes up, and oil went up a bit too for a little while, and bond yields went up. Usually that hits tech pretty hard, and for a little while the NASDAQ did decline, but then it recovered some. So again, I'm seeing resiliency in the market right now. And again, we saw a decline in the VIX, so we didn't see a panic. So again, we'll talk about some strategies in a minute on how can we take advantage of that, make money in that regard. Some economic data coming out next week that's important to note is on Wednesday we get CPI data. So that's what everybody's going to be looking at to either confirm or refute whether we think the Fed's going to be more aggressive with their rates or not. My personal opinion, again, is I think inflation is still hot. I think this number is going to show that inflation remains hot, and that's going to potentially, cause a decline because, again, it just reaffirms that the Fed is going to need to aggressively raise interest rates to be able to fight the still hot inflation. Thursday, we get more inflation data, PPI data, with more producer price index. And then Friday, we get Michigan consumer sentiment data. How's the consumer feeling? Now, the last consumer sentiment we got was a little more positive, but still very close to its low. So, good morning, Spacula. I'm glad to see you here. Thank you for joining us for the live stream. I hope all is going well with you. If you have any questions, please let us know in the chat. We'll try to address them as best we're able. So again, watch for some volatility based on this inflation data on Wednesday, Thursday, Friday. Also, just some upcoming events to note is options expiration for August is on the 19th. And we don't have an FOMC meeting in August. They'll have their Jackson Hole meeting. I'm not sure what the dates are on that. That's typically speeches and more economic theory. We don't expect any kind of interest rate hike data coming out of that. They'll wait probably till their meeting in September unless there's some kind of an emergency, but I don't foresee that. So then we've got September, November, and December. And so far, the estimates is that they need to hike interest rates of another point to point and a half till before the end of the year. So we could get a 75 basis point increase, or we could get 350s. It all depends. But again, if the CPI, PPI shows inflation still hot, we can expect them to be aggressive in raising interest rates to try to stem inflation more quickly. Excuse me a sec. So we've still got some earnings on deck for this week. The earnings calendar is winding it down a little bit, but it's still important to keep an eye on the earnings. The bulk of the FANGs, the big techs have reported. You said speculative action. Do you think these huge runners like HKD are bad for the market? I don't know. It's the whole meme stock, GameStop, AMC. I don't think it. It's the pump and dump stuff. Some people are making money, which is fine. I think a lot of your serious traders don't chase that stuff, and they don't pay a whole lot of attention to it. It's short squeezes, etc. I don't think it's necessarily bad for it. What I think is bad, and I'll make this comment, is if people get hurt. So if people go chasing those types of things and then they lose their money, they buy at the top when it's running hot, and then they get dumped on, they lose their money, and they quit trading. That's bad. So in that regard, I think those kinds of runners are bad. I hate to see traders get burned, lose their money, and then leave trading because they got burned. And I think a number of people are in that camp back from the when everything was running up and we went into a bear market. I think we lost a lot of traders and they lost their money. And I'd hate to see them not come back and not be invested in what I believe is the biggest opportunity in our lifetime. We're not going to see a 20% dip in the markets. I don't think it's typically once a decade or so you might get this opportunity. So I don't want to see people miss out on that opportunity because they left the market, gave up on stocks, on trading, and therefore inflation's eating up all their cash, and they're not making money in the market when it does turn around and start running again. So that's my opinion. So again, here's the Benzinga graphical view of the earnings. It's kind of nice. You can pick out the top guys, AIG, Blue Apron, Roblox is Tuesday. That'll get some attention, although they're probably Unity, etc. So you can see the graphical view. Also in investing.com, and there's the link there. You can get the more detailed calendar. And I'll also show you in a second the near-term calendar in Webull. So we post these links to the Benzinga and the investing.com calendars in the Surf the Market Reports channel in our Discord. Discord's free to join. You can find an invite in the description box below. We also post the economic data as it comes out. There's a snapshot from investing.com and also the textual version. So as this data comes out, I try to post it in the Surf the Markets Report channel in our Discord as soon as I'm able. So again, we hope you'll join us in our Discord. Again, free to join. Join in the discussions. Let us know, what do you think? Do you think these pump and dump runners, these short squeeze runners, is bad for the market, bad for traders? Let's talk about it. So what do you all think? So now we'll look at the markets in Webull. And just a quick note, I noticed Webull upped their offer. Thank you very much for the super chat, Specula. It's very generous, and we greatly appreciate that and all your support. So thank you again. So you can see Webull just recently upped their offer to 12 free stocks. So it was 6 since their 4th anniversary, and I just saw today that they've upped it to 12. And you can get 2 free stocks by opening an account up to $300 each, and then deposit any amount, and you get between 4 and 10 free stocks up to $3,000 each. So if you're not already using Webull, like I said, they just upped this offer from 6 to 12 free stocks. I don't know how long this will last, so grab your 12 free stocks if you're not already using Webull. It's our favorite trading platform. It's what we do the majority of our trading, and is using Webull, and you can trade from 4 a.m. To 8 p.m., which is one of the things we really prefer about Webull. And welcome, Clean Slate Trades. Glad to see you. I hope you're having a great day too. Thank you for joining us for the live stream. So for the market analysis for part 1 of our trading game plans, I like to look at this market screen. This is the online browser version of Webull, which is primarily what I use. We see, the NASDAQ and S&P were down. The Dow was up. This is interesting, the histogram. It's pretty balanced, advancers and decliners. And then again, Friday, we saw an outflow out of the NASDAQ. Last week, we saw an inflow, so technology was doing better. And now, again, we see this pop in bond yields, U.S. dollar strengthening, etc. So we see more of an outflow out of the NASDAQ. Again, as I mentioned, you can get a nice view of earnings, upcoming earnings in this market screen in Webull. You just hit the calendar, hit earnings. It'll show you what's coming up in the near term, and it'll say whether it's after market or before market. So I find that very helpful to see what's coming up in the near term. Good morning, Tanvir. Thank you for joining us. Glad to see you again. Hope you're doing well. So we'll look at the best performing industries, and I want to look at it for the week. Guess we can look at Friday real quick, and then we'll look at it for the week. So Friday, again, we saw rotation into energy, uranium, some basic materials, coal, again, energy. So again, this is for Friday. Again, I think this is a sector rotation. Renewables a little mixed, but if we look at the week, see more construction, more renewables. So renewables was a little stronger for the week, a little weaker on just Friday. We'll look at ETFs, give us an idea of some of the topics, categories, etc. So again, for Friday, we see the Dow's up. It's indicating up. NASDAQ, SQQQ is leveraged NASDAQ down. S&P looks mixed, nothing strong. Mid caps a little positive. Again, I don't know why they put the short on the yen under VIX, but they're putting currencies under the VIX category. So we could see yen up, euro up, shorting. So that'd be yen down, euro down. And in part 2 tomorrow, we'll hope you come back for part 2 tomorrow. We'll talk about the individual stocks that we're going to add to our watch list to play these various themes and strategies. Yeah, I haven't talked about the whole China thing. I will get to that very, very quickly. Our strategy on the recent events and having to do with China and Pelosi and all that. So again, down, NASDAQ. See positives on healthcare, energy, Again, these basic materials, technologies mixed, utilities down. Utilities has been strong. So again, we're seeing the sector rotation. Defensives mixed. Real estate was positive here, but I think if we look at the week, it was negative. And again, yields went up, so people tend to pile into banks. So when the yields go up, see commodities, copper, gasoline, energy. Gold's been kind of volatile. It made a run up, and then on Friday, again with a strong dollar, got pushed down because it's dollar-denominated commodities. So I want to look at other very quickly. So TTT is short on the 20 years, so shorting. TMB is positive, so you got a mixture on the, and we'll look at that tomorrow when I get my ETF spreadsheet. We'll look at all the Treasury ETFs and where that where there might be some opportunity there as well. We'll also look at the currencies, etc. Okay. So let's take a quick look at the futures, and then we'll talk about strategies. So again, the futures tabs in FinViz, I utilize this a lot to see the directions of the markets, directions of commodities, etc. And I've got a video that there's the link in the notes of how to use this futures tab in different time frames, etc. So again, we can see the Dow, again, a lot of chop in these. So it's very hard to determine if we're going to get a breakout or if this is just a fake out. Again, a lot of chop right around. It hasn't really broken its previous high. Same with the S&P. So again, we're seeing a lot of chop, trying to test the previous high. The NASDAQ did break out. Broke out above its previous high, and then we'll see if it turns back down because of the higher yields. Oil, people say if oil goes up, then tech, etc., goes down, but we've seen some strange behavior in the markets as of late. It's not reacting as it has historically. So same thing with bond yields. Even though the bond yields jumped way up, the NASDAQ was relatively resilient. It did decline a little bit. So we see European stock market ran up. Same thing. The Russell also is testing that previous high. Again, not determined whether it's going to roll over. Looks like it's peaking. All these guys look like they're kind of peaking, testing the high. They just need a push to either break out or they're going to roll over again. See, oil's been declining. Generally, we'll see a lot of volatility again in energy. Again, as I've mentioned a number of times, if you're day trading, scalping on very short time frames, there's plenty of opportunities to make money in these areas. You just have to be quite nimble because these energy stocks have been pretty volatile, particularly natural gas. We see the chop in natural gas. It's been oscillating up to like 5% on a daily basis. So we can see it looks like the trend is down, but again, a lot of volatility there. So again, we see gold did start to run up and then got hit with that strong dollar. Same thing with silver. But again, gold and silver seem to be running back up. Copper, same way. So then we see that the bond yields had started to roll over quite a bit, or the bond prices started to roll over. The yields had been declining based on the recession fears, and then we got this strong payroll data, and they said, well, now the interest rates have to go up. The Fed needs to be more aggressive, so it pretty much U-turned, and now prices are headed down and yields are headed up. Same thing with the dollar. It had been declining and then it kind of U-turned. We'll see if the euro reaches parity again. And again, tomorrow we'll talk about several ways we're looking to possibly take advantage of these trends in the currencies and the global markets and the European markets, etc. So let me see if there's any questions in the chat just to make sure I'm not missing anything. Then we'll talk about some strategies, some current trends, etc. Okay, I don't see any questions right now. Please post your questions in the chat if you'd like me to address them right now. So we talk about the Pelosi visit to Taiwan, and again, I try to stay away from the politics of the matter and focus on what is it, how does it impact our trading, and how can we adapt to it to make money in our trading. And we already saw repercussions, and there's more political repercussions. They sanctioned Pelosi's family. They cut off discussions between the U.S., etc. Um, they had the military exercise around Taiwan. In my humble opinion, I think this is just the start of a series of retaliation, repercussions against the U.S. for that visit. Again, I won't go into the politics, but the thing to watch out for is how is that going to impact your stock, something that you might be holding, you might be buying. And there's a number of things that they could do to retaliate against the U.S. One thing would be to impact U.S. companies that are doing business in U.S. And I can't necessarily guess what that might be, but I would think of companies that do significant business in China and are vulnerable to such repercussions. Just some examples might be Tesla, Apple, Disney, Nike. These guys all either have business in China, are dependent on supply out of Taiwan or China. I mean, they could blockade. They've effectively blockaded Taiwan right now. How's that going to impact companies like Apple, that get their chips from Taiwan Semi? Now, you all know we haven't touched any Chinese or Hong Kong stocks for almost a year, and I wouldn't touch them directly. We use the leveraged ETFs, Yang and Yen, to trade the swings in the Chinese market. But we wouldn't touch any Chinese stocks. But I'm also leery now of companies that have significant business in China that might be hit by their retaliation. So that's just what I wanted to forewarn everybody about, is think about it. Companies you own or looking to buy, how could they be impacted from any kind of retaliation from this? And I expect these retaliations to continue at kind of a slow pace. Asians are not rash. They think ahead. They move slowly. They have a plan. And that's what I would expect, is a series of retaliatory repercussions from this Pelosi visit. We'll see what kind of reaction the U.S. does based on these repercussions, but this could very well turn into a Cold War of tit for tat, going back and forth on various retaliations. So again, protect yourself, protect your portfolio. Again, there's ways, you can trade base to adapt to these various repercussions and reactions. Another thing, since I'm doing okay on time right now, we talk about sector rotation. I think this is probably the strategy that, given the chop in the market, no strong themes, a lot of mixed data, I think this is kind of what I'm going to be focusing on, is the sector rotations. Again, we see energy is up one day, down the next. Basic materials up one day, down the next. So I'm going to be looking for opportunities in these rotating sectors and say, okay, if a down sector starts rotating up, how can we take advantage of that? And one way is various ETFs. We'll look at those tomorrow. Um, you can do individual stocks. Again, you have to be, a little bit nimble because these tend to move from day to day. So what I'm looking at is the sector spider, sector tracker, and I have the link in the notes. It's also in the links category on our homepage. You just look for sector spider and the various resources, tools. So there's the sector spiders again in the links category under trading tools or our homepage, beachbumtrading.com, bum without the U. So I find this another useful way, in addition to the groups tab in SpinViz, is you can chart different sectors over different time frames of your choice. And if I go out for the week and I just start selecting all of them, we'll kind of see some of this rotation. And again, this is a nice interactive tool that you can use to look at, whatever selection of sectors that you want to chart over any time frame. So what I wanted to show is just, how we see some of these that were dipping down earlier in the week, then bounce back up over the end of the week or middle of the week, and then headed back down. So again, that's the kind of rotation that I'm talking about. Is, you can see which ones are the most dramatic and pick those out. This guy is obviously in severe decline. Looks like, consumer discretionary. So, which makes sense, right? Is the decline in discretionary income of people is causing this major decline in consumer discretionary. So again, I just wanted to share that tool with you and where you can find the link. Yes, thank you, Spacula. Yes, please come back tomorrow at 10 a.m. And again, we'll update our watch list. We'll talk about various ETFs, individual stocks that we can play, these various strategies, these various themes. How do we play the sector rotation, etc. So I hope that helps. That tool will also help you. Again, you can adjust time frames, just what sectors you want to look at. But again, another tool to add to your toolbox to trade sector rotation. So just another quick aside, since I was talking about discretionary, a point that I forgot to point out in our economic data that I think a lot of people miss because it was late in the day on Friday, doesn't hit the news as much, is the consumer credit number jumped much higher than expected and significantly higher than previous. What that tells me is people are racking up credit on their credit cards. So again, inflation's eating into their discretionary spending. They're starting to hit their credit cards. Eventually, they're going to run out of money, right, and run out of credit. And then we're going to see. We already heard about the auto industry was starting to see some defaults, increasing defaults. AT&T said they're still paying, but they're taking a few extra days to pay. That again, says discretionary spending is decreasing. Now, we've been talking for some time about how to recession-proof and inflation-proof your portfolio. I'm working on a series of videos with all the strategies we talked about before. I'll hopefully come out with that. So hopefully you've heard all that already, and that will help. But again, we're seeing this play out, and the indicators are a little subtle, but again, that consumer credit growing as fast as it is says, they have less discretionary spending. When the Fed increases interest rates, that hurts people that are paying on credit even more, right? So the last strategy I wanted to talk about is we're starting to see acquisitions. We saw Amazon bought iRobot. We saw Amgen bought CCXI. We're seeing these big acquisitions. And we talked about this quite some time ago, and I mentioned this thesis, but I just wanted to reiterate it because we're seeing these big acquisitions. Is I think companies and stocks that are currently cheap on a relative basis. An example would be somebody that's trading below cash. And they have some ongoing value. So, an iRobot obviously has value. They have a loyal customer base, etc. A biotech that is perceived to have, a valuable drug, pharmaceutical, is going to get scooped up. Particularly if they're trading below cash, they have some value. You're going to see these big pharmas are going to scoop those guys up. The hard thing about biotech is figuring out, which ones are candidates for acquisition. You have to get into much more detail about their drugs to guess which ones are going to be acquired. Obviously, if they're in a farther phase in their trials and they've been successful, they're going to be a better candidate. But again, other biotechs are going to run out of money. They're not going to be able to raise cash in a recessionary environment. And they're just going to they're going to get acquired or they're going to go under. Spacula is asking, can I do a segment in one of my videos describing how to determine if, yes, I will. And we do actually have one. There's one, how to find cheap value stocks in FinViz, and also one on how to find cheap profitable stocks in FinViz, both of which I think are valuable in a recessionary environment. So I'd recommend, you can go to our channel and search for cheap stocks, value stocks, or just there. I think they're in a FinViz playlist as well. But I can do more about that as well, about how to find stocks trading below cash. There's also a metric that I use, how many quarters they'll be cash flow positive, that I need to dig out the formulas for that, and possibly I could do a video on how to determine quarters cash flow positive. I think that might also be helpful, so we'll see. Good morning, Lloyd Byron. Thank you for joining us. Glad to see you here and in our live stream. So, does anyone have any other questions, comments? Please post your further questions in the comments in this below this video. We hope again you'll join us in our Discord. You can find the invite to the Discord in the description box below. It's free to join. We hope you'll join us in our discussions. We could talk about all kinds of different trading, asset classes, pretty much anything related to trading, etc. You can find the economic data news, etc., earnings reports, etc. So, and also when we release new videos, you'll get notified that way as well. We also have a Facebook group. You can ask us questions, comments, have discussions, etc. You can always hit us up on social media as well. All of our social media links you can also find under the links on our homepage. Again, beachbumtrading.com, bum without the U. And please come back tomorrow at 10 a.m. and we will talk about, based on all of these strategies, based on all this market analysis data, what individual stocks, ETFs, etc., are we going to put on our watch list to trade next week for the week of August 8th through August 12th, and whether the stock market's breakout or if it's a fake out. We'll talk about, how we can make money trading in either environment or really in any market condition. So thank you again for joining, everyone. Spacula, Lord Byron, Tanavir, Captain Maddie, Clean Slate Trades. Hope I didn't miss anyone. If I did, I'm sorry. But again, thank you all for joining us. Thank you for everyone who's rewatching this video at a later time. Again, let us know how we can help you succeed in your trading career. Join our Discord. Let us know there, Facebook group, social media, etc. And we'll see you all tomorrow at 10 a.m. and have a great rest of your day. Thank you.